Scott Bauer joins us now from Prosper Trading Academy to give us his take on this. Scott, the oil market looks pretty broken. We've got a massive contango in place, and I'm wondering how much lower prices could go.
Sure. Massive contango is really an understatement, meaning that the futures prices going out 3 months, 6 months from now are considerably higher. How much lower it can go? You know what? I think mid-teens is really a number that we can get to. If you look right now, consumption is going to drop by about 25% just this week because of social distancing measures, containment, and the coronavirus, overall now impacts like over 90% of global GDP. So in the short run here, we can still go further.
Just in terms of the implications of all of that, what do you think they are? I'm trying to balance out what the long-term, short-term story is. Clearly, short-term, as you say, the price is downwards. But as you look further out, we are looking at a significantly higher oil price. What are we pricing in further down the road? Are we pricing in a return of economic activity on a decent scale? Are we pricing in a return of the OPEC Plus agreement? I'm wondering what the story looks like in 6 months down the road that gets us to the kind of position that the market is currently pricing.
Sure. I think the market is looking at a modest upturn in consumption, but more so the fact that Saudi may back off from what they're doing right now. And like you suggested, the OPEC Plus consortium, we get back to some sort of normalcy there. So, this perfect storm that we've all been through over the last month between supply and demand, consumption, production, is going to ebb a little bit. So I think the market is taking that into consideration, but just as much on the consumption side as it is on the OPEC Plus and Saudi really coming off those levels.
Scott, always great to get your take. Thank you for joining us. Stay safe.